Hey guys, welcome back. And we are live for another morning edition of Trading Bitcoin, at least my morning here in the US. I did a video very late last night in order to accommodate my Australian viewers, who are actually pretty plentiful, just based from my interactions with people in the world of Bitcoin. Yeah, I'm back in New York. Man, I miss my home base. Oh, the good microphones, the good monitors. Anyway, I have a shitload of work to do. Plus, a million personal stuff that I, kind of gets pushed away while I travel. So I want to get this video out of the way, and then I'll be working the rest of the day. I may start tweeting out charts of Bitcoin again. I kind of missed that. So we'll get to that while I'm home in New York. But hey, let's just jump right into the price. If I do end up making these videos twice daily, I have to make them more often. Also, I'm going to get back to doing more news stuff and more how the news affects Bitcoin and understanding. Anyway, a few things will change. I just have to have a few meetings with people and we'll see. Couldn't get Jimmy on this morning. Couldn't reach him. So here we go. Maybe we'll do one later. I don't know. We'll see. We'll figure it out. All right, let's do it. All right, usual educational disclaimers. This is an educational website. Please learn trading. On my website, Liberty Life Trail, you have sections 1 to 5 for more traditional stuff. Section 6 is for the new stuff, right? Like when you see these numbers on top of my candles, you have no clue what they are. Please go to read section 6. It'll fully explain it. If you are interested in actually acquiring the code that puts those numbers on top of the candles, please check out the consulting section, or an even better way so that I know you understand technical analysis. This is not free, of course, but attend one of my seminars. They're going to be happening all over the world. I actually enjoy doing them, and the next one is going to be in New York. Got about 5 seats left. A few people emailed me with interest. So go ahead and check that out. I need to change the time start to 9:30 in the morning for, well, it's better for me anyway. All right. Anyway, let's move on. I didn't really get a chance to look at all my notifications this morning, so I have no idea what's going on. I woke up, saw the price hovering around resistance, just like it was last night. Nothing has happened. I'm more curious to take a look at the price of the futures of the S&P 500. I just want to see where the market's opening because the stock market right now is pretty important to me. All right. So here's the weekly chart. The weekly chart remains at the top of the candle. Now, this is very, very good. Of course, this is still Tuesday. It feels like a Monday, though. I hate like Monday holidays and the market opens on Tuesday. It totally screws me up. I'm on the wrong day of the week all day long. Anyway, the candle is at the top of the candle. This is what you want. This is what you want to see. You want to see this candle close A, near the top of its own candle, and B, above the top of the prior candle. These are the weekly candles you want to see in order to be comfortable with your bullish trade or your hodl position. Okay. This is what you want to see. You don't want to get nervous. And as long as the current candle is sitting in its current position, I am not nervous about the bullish run in Bitcoin. Of course, there could be another bull trap. It's not going to be as bad as the last one. That's pretty much impossible. We are cautious on the bear side, and we are keeping an eye on what's going on. So there's nothing more to say weekly. I remain waiting for my price flip. The price flip will happen if the current candle closes above 11,700, which is not that far off. It's only $200 away. So $200 more to the upside. And yeah, we almost got there, right? The high for the current week is 11,645. So we were about like $40 away from having this flip into a green one. Now, having it flip to a green one is just the first. It is actually telling you to go neutral long term, and it's the following candle that trades above that high that tells you you can enter into a safe bullish trade. Now, obviously, that did not work out the last time we had a green 2 trading above a green 1, but each of the last, let's say, 20 times it did work out, right? Like nothing works 100% of the time. I've seen this indicator work like 80% of the time, but it's like, what do you call it? It, I mean, but when you decide to go all in, of course, that's when it's not going to work. That's kind of how life is, right? But other than that, it works pretty damn well in my opinion. All right, here's the daily chart. Again, the candle got a little bit higher than it was last night when I was doing this video. And we are still looking pretty good. If we close above this resistance cluster, we have about 10 hours to go in this candle. So I really want to see us close above the 50-day moving average, which is currently sitting in the vicinity of 11,400. Now, I would love to see it close the candle close to as close to 11,400 as possible. And at the same time, I don't want to see a run up to 12,000 and then pull back all the way down to 11,400, giving us a shooting star. Okay. So this is what I mean by we want as many ducks to line up for as safe a trade as possible. Now, keep in mind, of course, that we are coming up on a daily 9, which would most likely give us a short-term pullback. Now, it doesn't have to, but that the statistics are with you for a short-term pullback. Now, in a perfect world, in a perfect world, we would get a little bit of a pump right now. I would love to see a pump over the next 48 to 54 hours. I would love to see a pump all the way to 1300 and then have us reverse from 1300 on Thursday or Friday, like going into the weekend. I would love to see us reverse from 1300 back down to the 1150 area. That would give us an opportunity to take profits as a trader, right? Like if there was a run up to, I'm just giving you a heads up. I mean, I don't know, maybe I won't be doing these videos the next 48 to 54 hours, right? If there is a run up to 13,000, I would feel very comfortable taking profits there going into the weekend, because you're going to have your daily 9 looking for a pullback, and then you buy the dip I mean, again, you watch the charts and you watch the candles, but I would feel fairly comfortable buying the dip at 11,500, right? Like that would be like the perfect technical analysis scenario. Of course, nothing's perfect, so you have to adjust to what you can. But right now, we are closing above the resistance cluster. There is absolutely no resistance between current price and 13,000. However, be very, very mindful of the daily 9 candle that's going to come up in about 2 candles. All right. Next, the 4 hour. So the 4 hour is currently on a 9. You can see that the arrow is orange and not red. That means that the 9 is not perfected. For more information of what it means, of not being perfected, that is fully explained in the Learn Trading section of my website. And the specific article that's referring to this is right here. Okay, so you go ahead and check that out. It's called the Tom DeMark indicators, even though my code is a slight variation of that. All right. All right, let's get back to the chart. All right, so this is a 9. It's not a perfected 9. I would have loved to see a perfected 9. In order to get a perfected 9, what we need in the next 1 hour and 40 minutes is to make a higher high. We can close anywhere on this candle. Well, we have to close anywhere on this candle above 11,172 in order to maintain this 9 and not flip to a red 1 like what happened on February 17th, where the candle opened at a 9, but by the time it closed, it had already flipped color. This is so much easier in the regular stock market and commodities than in Bitcoin, that's so volatile. And I think enough people are trading this indicator now to potentially make a difference, which is why I want to set up notifications that tell you the moment, even if a 9 shows up for a second, and it doesn't really matter if it closed on a 9 or not. Though ideally, I want to see it close with a 9 there. But perfected or not, it doesn't matter. It's a 9. Now, there's good and bad in this little cluster of 4-hour candles. So the good thing is you had way too many opportunities to sell the $11,500 top. And while this is only a 4-hour candle chart and not a daily chart, it still feels like 11,500 should not be any kind of a critical top. Critical tops even on the 4-hour charts, should look more like one of these doji candles that only gives you 15 minutes to buy the top, or even something like this, one of these candles with a 9 on it, where again you only had 15 minutes to buy the very top, and then immediately you're down like hundreds of dollars and you never really go back. Or I mean, yeah, the 4-hour charts do give you a couple of candles. So maybe if we had like maybe another 1 to 2 candles in the vicinity of 11,500, I would then consider this not to be any kind of a critical top. But already having 3 candles with somewhat thick bodies and no doji candle, no real shooting star candle, um, like this 7 candle 2 candles ago on the 4-hour chart. So we're talking late last night, right before I started my video, I guess, at 11 p.m. Eastern time. And then the following candle after midnight, we started falling. I slept right through this, guys. I like passed out immediately after the video. So I went to bed before the 3 a.m. candle came about. And the 3 a.m. candle, whoa, had a pretty big range. The 3 a.m. candle opened at last night's candle. It opened at 11,500, pretty much where we are right now, a little bit higher. And then it fell all the way to 11,125. By the time I woke up and looked at the price, we were already back to where we were. So how do you trade that environment? And the answer is you kind of don't trade this environment. And here's why. Because if you were trading into last night, you should have been bullish into that trade, right? You should have been bullish as of the morning of the 19th, and you should have been sitting on a somewhat decent profit. So once candle 8 and 9 were coming about, basically the last 6 hours, you're actually looking to take a profit on this trade, not looking to short it or not looking to buy the dip here. Like I would have waited for the 9. I would not have been so hesitant as to go short at any point here. I would consider taking my profit again in this area very, very short term because of this 9 on a 4-hour chart. Look for a little pullback. But the daily is still bullish for a couple of more days, even though you also should be looking to take some profit from your daily trade that should have been entered properly in the vicinity of $9,500, even though the 10,000 resistance was lurking around the corner. Look, trading is not easy. Trading is hard, right? You have to understand your time frames and what time frame you're trading. And I'm trying to explain all time frames to kind of try and help everyone, even though I know I'm doing more harm than good. Okay, here's another part that I don't really like to see in my trading. Do you guys see this golden cross? Let's see. When I look at a chart, I mean, I don't notice everything, but I notice a lot, like instantly. Okay, I guess it comes with experience. So notice the golden cross. This is not the kind of golden cross I like trading. Those of you that attended my seminars know really, really well that the golden cross that I like trading is when the price pulls into the vicinity of the cross. So what that means is if we had had a more serious pullback. Oh man, I like made tea, but I didn't pour it into a cup. I'm an idiot. Anyway, shoot, I don't want to go up there either. Anyway, this sucks. All right, fine. Anyway, so when the price of Bitcoin started pulling back in around 7 p.m. Eastern time on February 17th, the perfect trade would have been pulling into the cross with giving you some kind of a reversal candle, like you see this dragonfly doji. And if we pulled into the cross with the reversal candle and preferably one of my 9s to the downside, I would have loved to buy that dip. But hey, trading doesn't always give you what you want. So the current environment, I hate trading the golden cross when the price is so extended above the cross. It's like you buy into this trade off the golden cross, and then the price can pull back like $1,500, and you're like, damn, I'm still bullish, and now I'm bouncing off the 50-day moving average. So this is not the kind of environment I really like to trade. In my experience, prices pull into the cross, and when the cross happens and the price is like way out there above the cross, you tend to buy and you tend to immediately start to lose money as it then pulls back into the 50-day moving average. So please be aware of this minor wrinkle. So right now, because of the 9 on the 4-hour chart and the daily being on a 7, even though there's 2.5 days to go, I would be a little cautious jumping in on this trade. And if I was to like jump in on this trade, I would be looking for a top around 13,000. Once again, combining the 4-hour and the daily chart, the perfect entry would be a 1 to 4 candle correction on the 4-hour chart, maybe back to 11,000 or so, and then a swift bounce from 11,000 to 13,000 in 2 days. Is that going to happen? It's probably not very likely. Bitcoin is probably going to be a bit of a pain in the ass over the next 2 days, and it's not going to be very easy to read. So I don't really see any amazing trading opportunities right now. Once again, the hourly chart is a bit above my channel. So it's above my channel. It's kind of sitting in the middle of nowhere. My numerical indicator is flip-flopping back and forth. So the numerical, so the 1-hour chart currently is somewhat useless to me. If it continues to stagnate for the rest of the day into the evening, I can then foresee a breakout opportunity, kind of what happened, here on February 17th, but that breakout was led by swift downside. So the 1-hour chart isn't being all that useful. Let's glance at Litecoin. Litecoin pulled back a little bit down, looks like. So everyone that was very happy about the pump isn't really getting much. We have to wait for the day's close and see how tomorrow's close goes. The S&P 500 is going to open in 4 minutes. 4 minutes. ETA 4 minutes, and we are already pulling back. Okay, here are the futures. Now, of course, that doesn't mean anything. Market open can completely reverse the futures. I'm about to do some Q&A, and I will stick around for at least 10 minutes of the market open, maybe as much as 15, and we'll take a look and see what's going on in the traditional markets. All right. All right, let's do some QA. Mike, thank you for pulling together the questions for me. Let's do it. Who else besides Tom DeMark do you look up to in regards of trading and taking the time to apply their work to your TA and other published materials to recommend? Okay, so, oh wow, let me plug in my computer. Hold on, my battery's about to die. Can I go grab that cup of tea? Shoot, hold on, guys. You get to look at my apartment. I'll go grab a cup of tea. Hold on. All right, now we're in business. Okay, so back when I started Liberty Life Trail, I wanted to make this a resource for trading, right? So actually, if you look at the right side of my, if you look at if you look at the right side of my website, right? There's a couple of links. Now, Zero Hedge needs to go away. I'm not a fan of Zero Hedge anymore at all. Again, this list is like 3 or 4 years old. And there's a couple of links here that I strongly recommend, not necessarily Zero Hedge. So uh, I learned a lot of economics from reading these two guys, Mish and Martin Armstrong. Oh wait, I'm not screen sharing. Ha ha ha. My bad, guys. Right. So on the right side of my website, right, like everyone makes fun of my. Oh yeah, I had to send this article to someone a minute ago. Um, on the right side of my website, I mean, the reason why my website is 1980 style is because I like having the maximum amount of shit on my website without having to click anything, right? So on the left, you have my Twitter. Here you have my recent posts. When you go to my home site, I plan to publish like every day on my website. I just can't because I'm just so busy. Haven't published anything in months. And you have like the last 10 articles in full, so there's no clicking, no nothing to read my stuff. There's my calendar that I need to update, and recommended blogs. So right here you have Mish, who I kind of, oh wow, March 20th 2003. So he changed his website, guys. This is how old my website is. So um Yeah, so I need to update the link, right? So God, I hate these things. Like I hate this, right? Like I hate these new websites. It pisses me off. So here's why I hate it. In order for me to read his articles, I now have to go to his website, and now I gotta click on each one of them, right? Where before, in his original website, I can go right here and I can read like the last well, normally, right, when I used to go here, I can read like the, well, not anymore, well, his original site was, I can read like the last 10 articles that he would publish without any clicking. And that's how I made sure I structured my website. But anyway, um so the new one, but anyway, I learned good stuff from him. I thought he was very helpful. Also, Martin Armstrong, let me see what happens when I click on his blog, because he also redesigned his website. And February 20th, so that one's up to date. I'm so pissed I haven't read Martin Armstrong in like 6 months again, and I've been to his conferences. So that's good. Also, Chiavaco Capital. I really liked his stuff. Again, looks like he redid the website. He does a technical analysis video every weekend, and is on Twitter. Really enjoyed following his work. It also helped me out a lot in my learning. And I like Chris Kimball as well. And again, he also changed his site. Kimball Charting Solutions. There it is. Right now, would I pay any of these guys for their proprietary, calls and all this stuff? And the answer is no. So I wouldn't. Let's just say. So again, he also used to have, like, the original site would have, like, like the last 10 or so of his, uh, charts and stuff without any clicking, and now everybody's about clicking. It like pisses me off. It's like I refuse to go to a website if I have to click 8 times to read your last 6 posts. It just bothers me. Like I hate all this clicking. So inefficient. I mean, again, I don't care about my click stats, right? Maybe that's why. But anyway, would I pay for any of their proprietary stuff? No. I recommend learning how to trade and doing your own calls. So I don't like paying anyone to follow their trading, but looking at these guys back in the day did help me. And also, this was a weird one, Oakshire Financial, and of course, like, it's always like they disappear for like 6 months and then they come back. And wait, on LinkedIn. No, I don't want that. Yeah, so I don't know what was up with that. They keep changing the URL. I don't know. It's just like again, I wouldn't pay them for any of their service, but as far as like looking at their charts and their trading style and their indicator style, like it also was somewhat useful. Though I should probably remove this one. I wouldn't recommend it like the rest. That's pretty much it. There were others along the way that I've surpassed. But anyway, you kind of get an idea. That was probably a too winded of a conversation. The stock market open. Let's go and take a look. Right. So let this develop, right? Those that attended my seminar know my golden rule that I used to break all the time, which is why I kind of gave up day trading stock market because I couldn't abide by my own rule never to trade within the first 30 minutes of market open. But if I was doing a video and I had followers, I would be able to stick to that rule. But when you're left to your own devices, it's really hard to follow your rules. Okay, so you see here you have a reversal candle and you have the formidable 50-day moving average. And now we're struggling. So what I would say is if today's candle, if there's significant weakness in the stock market, and by significant, I mean the S&P 500 going down 10 or more points, I would then be looking for a secondary low, whether that's a higher low or a lower low, and then look for my indicators, RSI and MACD, to help guide me into divergence or confirmation. Again, this is something I talked about heavily in our trading seminars in DC and the one before that in California. All right, let's move on. Tone, I get frustrated when I hear you constantly defending your analysis from people who expect you to give predictions that are 100% certain. Why do you waste your energy and time? That's a very good point. And the question is, I don't know. I guess I'm a perfectionist. And if I'm not right like 70 or 80% of the time, I feel disappointed. So I guess I want to be right 100% of the time. And I have like kind of confidence that I will be right 100% of the time, but obviously I can't be right 100% of the time. So it's a combination of, me being disappointed when I'm wrong and trolls getting to me a little bit when they point out at those times that I'm wrong. But you're right. There needs to be a better understanding of the reality of trading. Um, Toad, any chance you might offer the seminar online or other videos for us who can't attend the seminars? The answer is yes, but I don't have um, the means or the capacity to do that yet, right? So there's a couple of things I need to do. First of all, I need to actually standardize the sign up for my seminars, right? Like right now, a lot of time is being taken up by manually, registering each person by hand because I didn't actually think that it would be this much like I didn't think there would be this much demand for my seminars. So there's lots of things that are time consuming for me that need to be first automated. Then I want to, spend the rest of the year going around the world and teaching this seminar. And then eventually this will go online. I will record videos and I will allow people to pay for videos, 1 hour videos, educational videos that they can pay with a QR code on my website. I hope one day soon, and watch them. I also might do online. Like I don't have the means to do this right now. I know everyone's gonna offer me because everyone's building these online educational tools where I can just do a webinar and people pay into the webinar and then I can do it online. All of that is coming, but probably not till later in the year or probably early next year. So all of that is coming eventually because you're right. As I gain popularity, I will need to keep my in-person stuff to more and more advanced things and move the basic stuff onto the internet. All right. Next. Is any of these recent rally based on improving fundamentals of Bitcoin for favorable news? Or is this mainly a technical bounce from oversold condition? It's always both, right? It's always both. Now, first of all, Lightning is coming about smoother and faster than even I had hoped. So that's amazing favorable news. Okay. Governments are not removing money laundering laws anytime soon. That is also favorable laws. We are bouncing from an oversold condition. And it was a very bottoming looking bounce. So technically speaking, we are also looking very, very good. Now, once again, the one thing that actually worries me is oh man, I always forget that. So I like to fall to Trade Block because I keep forgetting that other website. Trade Block. So once again, what continues to worry me is the grossly empty mempool, right? Like Oh, it's not that empty. Okay, it's good. I like seeing 20 satoshis per byte, right? I mean, this is where I want to see it, right? It's not too free to spam and make it simple, and it's also not too clogged for your transactions to get delayed or be too expensive. This is where I want to see my mempool. When I see the mempool bone dry, it worries me that no one is really using Bitcoin and that we're all, a little bit overhyped and overpriced. All right. All right, let's move on. What is the recommended stop loss order to enter? Do you use a market order? Do you ever use trailing stops? Okay, you have to be new here because I constantly talk about where to set your stops. Constantly. Um, and I just didn't do it on this video. Like this is like the first video where I did not give you a single stop. And the reason is because the daily condition and the 4 hour condition are not geared to entering any trades. They are currently geared to taking profit from your current trades, and the 1 hour isn't giving you any kind of a trading signal, right? So, but however, for example, if you do trade the numerical indicator, right? This is where the problem comes in. So, normally I say you enter when a green number starts trading above a prior green number. And even though that happened right here, I would have been cautious because there was a single price flip sitting on an island. Okay. If you did enter your bullish trade right here, feeling that it was a breakout, your stop loss would have obviously been right here below the swing low or below this one candle. It's really up to you, to your discretion. But either way, your stop loss got hit like the following hour. So this would have been a losing trade. Now, you then ended up with a Dragonfly hourly doji. Was that enough for you to try one more time on a bullish trade? The answer is maybe. It depends on your trading style. If you did jump, on a bullish trade because you saw a Dragonfly doji bounce off of a trend line, then your stop loss would have been below the doji. Once this expanded range candle happened with this guy, and you did enter here, you have to set your stop loss above your entry point to make sure this trade cannot cost you any money. Now, if you did not jump on the bullish trade based on this technical picture, but you jumped on your bullish trade when a green 2 started trading below the green 1, your stop loss would be either all the way down here below the swing low, or more realistically here below the last like down candle. However, because this popped a fair amount, I would be playing it safe right now and putting my stop loss all the way up here. There's a high probability this trade would not be all that profitable, and the first chance you get, you have to set your stop loss right above break even. Now, I understand that you get whipsawed, especially like the futures markets, but hey, you're the one that wanted to trade Bitcoin, right? My trading style comes from the traditional markets, and that's how I learned how to trade traditional markets, and it was very, very good. And anyway, let's move on. I really should have like standalone videos for stop losses and stuff. And I kind of made one, but it didn't come out very good. So I don't know if a client ever calls again to discuss specifically to discuss stop losses. Um, I will. I'll try to record that video better and publish it to you guys. Well, actually, publish it to other paying clients. I don't know if I'll publish it, or eventually when I have like a bunch of videos on my website that you pay into a QR code. All right, I'm like 40 minutes in, and let's see how the stock market's doing. All right, so we're still hovering, like the market can't decide right now. Like look at the futures, and if I go to the 10-minute chart, I used to trade the 10-minute chart on the S&P futures. I even talked about my strategies with my private clients, with my seminar attendees. I'm not going to talk about it here, but my seminar attendees should be paying attention the next 15 minutes. Hmm. Wait, so the futures are actually on a delay? I believe the futures are on a 10-minute delay. I was about to say, how come this isn't the second candle? I can open my futures, my broker, and I can see it in real time, but or I need to just connect my broker to TradingView. Haven't done that yet. All right, let's move on. Any comment on Amazon coin? um, no. Oh God, we'll get to that. So Amazon. Well, me and Jimmy will talk about it. Maybe I'll talk about it like later this week. Amazon coin. It's only in the UK. Guys, this is not going to be an ERC20 token. Just stop dreaming. Stop dreaming. You're not going to speculatively trade it. It'll be a one-to-one peg coin. This is no different than Delta Miles. Okay, this is not going to be a security. Amazon is not that dumb. Stop dreaming. This is not like this is not going to be an ERC20. There's nobody that stupid at Amazon. I'm serious. Just relax. All right. Let's it's just a digital version of their gift cards. Like it. Relax. Next. Any thoughts on the GBTC premium? Oh God, I've been meaning to do like a whole like crypto scam about GBTC and I never got to it. Any arbitrage to trade GBTC? I would probably trade that arbitrage, but I'm just like too busy. Every time I get to the GBTC, see the problem with me talking about GBTC, it's like a 1 hour long discussion only about the GBTC premium. So how about this? I will try and bring on a guest and we will thoroughly discuss the GBTC premium and stuff like that. I already have a guest in mind. You know who you are. Name's Tyler, and we'll talk about GBTC along with many other things when it comes to finance. All right, next. Why do the Fibonacci number levels work? I don't know why they work. They just kind of somewhat do. Where do these numbers come from? Where did they come from? The mathematician named Fibonacci, even though he did not come up with that system, it was kind of named after him. The Fibonacci sequence is really, really cool, actually. I remember doing a project for my number theory class where I tried using the Fibonacci's to kind of predict the prime numbers. It was, man, I gotta get my hands on some of those old projects. It's just an interesting sequence. Just Google the history of the Fibonacci series. And then when I saw it in the stock market, I'm like, all right, fine, I guess we'll use it. How does it make sense? 99% of all this technical analysis doesn't make sense. I will agree with you. But it just, it's useful for your trading. Call it groupthink, call it herd mentality, call it whatever you like. Let's go back to the S&P. Hey, if it makes you money, it makes you money. All right, let's move on. Jesus Christ, there's a lot of questions. Guys, I can't do this all day. People are already complaining my videos are too long. Yeah, you keep asking questions. All right, next. Monthly BTC chart has a massive hammer. Is 20K coming within 2 months? I don't know. Let me see. Okay, so the monster hammer on a monthly chart, unfortunately, is not very relevant, and I'll tell you why. Because 2 days do not make a trend, right? Like while it's nice to see a hammer like this, like you really need this hammer, like after, let's say, a 5 or a 6 month downtrend, at least give me 1, 2, 3, 4, 5 candles, and then the 5th candle is a doji, right? Like the thing is, this is also a monster hammer, but it's totally meaningless because it's the 2nd candle after the top. Right now, we have the 3rd candle after the top. So while this does look like a massive hammer, first of all, there's still like 10 days left in a month, so anything can happen. Remember, the first 10 days of the month we were down here, the second 10 days of the month we are up here, and there could be 10 more days of the month that can send us back down to 5K. I mean, you just don't know, right? So first of all, the candle has to end. Second of all, this hammer on the monthly chart is actually meaningless to me, because if I saw this hammer, let's say in August instead of in February, then I would have taken it the fact that it's a hammer seriously, but a second candle of a downtrend does not make a trend. So the fact that it's a monthly hammer is totally irrelevant. Sorry to bust your bubble. All right, let's move on. When are you going to do a daily show with Jimmy again? I don't know. I think Jimmy's finally awake because he's read my messages, but he's probably not going to jump on at this point. When Jimmy and I can coordinate, I mean, it's hard. Jimmy's busy. I'm busy. We're doing like a bunch of random stuff, and Jimmy has a job now. Apparently, I can't believe it. But anyway, yeah, I'm gonna try. I'm gonna do my best, guys. There's no fallout between me and Jimmy. It's just coordination. Next. What exactly did you used to do at JP Morgan, Bear, and your life working in finance? I was in risk analysis. I mean, I was part of Bear Stearns Asset Management, and we used to build risk models to process hedge fund positions for risk. This was either for the hedge funds themselves, if they did not have internal risk analysis. I mean, it's not easy building a risk model. It requires PhDs and lots of work and lots of data. So I used to help the quants build risk models. I have a master's in financial engineering, though I wasn't a very good programmer and I wasn't smart enough to build the risk model, but I was good at my job. There were other like a million aspects to that job, but the short of it is we build risk models for either the hedge funds themselves that couldn't do it on their own, or for hedge fund investors as a neutral third party. Like before, let's say a pension fund decides to put $1 billion into a couple of hedge funds, they want to know what the hell is the risk of those hedge funds positions without proprietary knowledge of what those positions are. So we had an infinite number of IDAs where we get to see the hedge fund positions and we would process them for risk and report on the risk. That is why I had huge oversight on me, that I wasn't allowed to trade while at that job because I had access to many I didn't have access to like the top 5 hedge funds in the world. But I think we had like 3 of the top 10 hedge funds showing us their month-end positions, and then we had like about 100 something hedge funds that would report to us their month-end positions. So by querying a database, I can see exactly what a hedge fund is holding as of, let's say, February 28th, and then March 31st, we would get another like file with all of the positions that hedge fund has as of the end of the month. But that's when we're busy as hell, so it's not like I even have time to Google and see what the hedge fund's doing. All right, next. Any chance of doing on the record with Cliff High or more crypto scam? Yes, and yes, Cliff High will probably come sooner than the next crypto scam, but I'll try and get them both. Tone, were you ever a zero hedge, doom and gloom, end of the world, Rothschild conspiracy type guy? Yes, I was. Thank God I'm not anymore. Next, what are the history of the candlesticks and who invented all of this crap? See you on Saturday. Just Google it, guys. The candlesticks come from Japan. They were used to predict the price of rice. They predate the stock market. All right, next. People love to find patterns. Our brain looks for patterns, and we try to predict shit all the time. Why do you say that Monero is done if something happens to Fluffy Pony? Aren't there other devs still? Maybe. Next. Tone, what kind of tea are you drinking? Yeah, I like all kinds of interesting tea. So I usually buy all of the, Trader Joe's is near me. I really like, okay, so I can recommend like my favorite tea. I don't have any in my house. I need to like do a bulk buy. Harney and Sons. This is actually like my favorite tea. Really good for you tea drinkers out there. Man, I should do an affiliate if everyone starts buying. I really like the Harney and Sons brand. I know I'm boring some people, but let me see here. Collections. I really like you can do like a sample. They have like I really like these. Um, I really like these teas. This is like my favorite brand. There's like stores here in New York. I don't know how global this is, but this is one of my favorite brands. Really interesting combinations of tea. Really good stuff. Um, oh, I hate pop-ups. That's another thing that drives me nuts in all these websites. So they just lost some points. Um, hey, they got a nice coupon code for you. There you go. Um, anyway, so yeah, so I'm a big fan of tea. All right. That's not what I'm drinking now. I run out of all of these, so I just have like Trader Joe's stuff, like all kinds. All right. Let's close that. Let me not promote random companies. Next. Why do you ignore the 13s? Are they more useful in traditional markets than crypto? Yes, I have found that the 13s are very useful in traditional markets, but I have not found the traditional 13 very useful in Bitcoin. I have found the aggressive 13 more useful, but again, like I don't have time to run all of these statistics, but some of my clients already have started doing that. Next, Tone, could you glance at the bond market for a second? Sure. Nope, it's TLT, not L. That's me being dyslexic, not LTL. Um, TLT daily, and let's also look at the 10-year yield. Oh, wait, what was that one? Oh, I had a 10-year bond daily. So what the hell's the difference? What's the what the hell's the difference? What's the difference between this US government bond 10-year yield and this US 10-year T note? Jesus Christ, what the hell? Oh, that's the price of the bond. Okay, got it. And this is the interest rate. Got it. Okay. I see the difference. All right, that's the interest rate. And this is like the price of the bond. Okay. So this is the ETF of this. So let's indicators, invite only scripts. Oh, that's not the latest one. So my scripts, backtest. Got a few minutes, guys. I'm keeping these under an hour. That's it. Right. So hey, this is interesting, right? So look, the bonds are on an 8, about to be a 9, with a potential 913 on the same day. So by the way, those of you that are getting all these numbers at the top that have access to my code, you can get rid of that by going to the settings, background, and indicator values. Okay, so just keep that in mind. Yeah, so wow, let's look at the bonds tomorrow, guys. Let's look at the bonds tomorrow. The price of the bond might actually bottom tomorrow with a 913 on the same day. If we get a big down day, I would love to actually see that. You can also see the aggressive 13 bounce it strong for like a day and a half. And this was the 9 that set off the countdown, right? And now the countdown is coming to an end with a 9 on it. So this is going to be very interesting tomorrow. Thank you for giving me the heads up. So TLT should be similar. Unfortunately, the TLT is the ETF, and it's a little spotty because of the gaps, right? So it's not as clean. So that's the problem. See 124.75 and 118.35. So this is the US 10-year treasury note. So I would love to see weakness today and true weakness tomorrow. Um, yeah, it's not even an 8 anymore, right? So, right, it needs to go one tick lower. It has to be lower than that equals to. So a little bit lower here, and then significantly lower tomorrow, and then you get your 913 on the same day. I would love to see that. So let's take a look at that tomorrow. Now, almost the opposite thing is happening in the yield. So the yield is gonna um oh wow, there's no countdown numbers. Okay. Um Interesting. So we missed a 9 right here, and that's why we don't have any countdown numbers. See this candle here on 115. If I go to the treasury bonds, right? I believe that must have been a 9. A 9, yeah, it was. See how there was a 9 here on the price of the bond that gave you this countdown to 13, but on the yield, you missed the 9 by probably just a tick, by a tick. So um, again, this is why there's no countdown to 13. Otherwise, these charts would have lined up. And again, this one is off by one candle. So either way, the yield is coming to a potential reversal. The bond price, obviously, as the yields go up, the bond prices come down. So bonds are being decimated. And like I told you guys a few weeks ago, there's no way the stock market was going to keep going down because it has an inverse relationship to the bond prices. Like bonds and stocks do not go down together for any longer than like a few weeks, right? They have a completely inverse relationship. Like stop reading Zero Hedge. They're going to show you like 3 days and they're going to pretend like it's an 8-year-old trend, okay? Bonds and stocks fall together or rise together for very short periods of time normally. So my expectation was that the bonds were going to keep going down and the stocks were going to actually keep going up. And right now we're seeing weakness in the stocks, which makes sense because we're about to see some strength in the bonds. I think the bonds are coming to a technical bottom. The yield is going to come to a technical top and the yield should pull back. I mean, look how much the yield has gone up, which means that the bond prices have significantly fallen and the bond prices are now coming to a bit of a low. So I am going to look for a rebound in the bond prices, a drop in the yield, and therefore a drop in the S&P 500 because they're inversely correlated or negatively correlated. All right, next. Any confirmed speaking for Tone for conferences in 2018 yet? Is it the same presentation that from before? No, I have I don't know what that means. I have multiple presentations. I have switched my presentation from Bitcoin speculation, the history of Bitcoin, to the inevitable ICO bubble. And yes, me and my manager are working on a bunch of speaking gigs for 2018. We will keep you updated soon. Now that I'm in New York, we're actually going to get to work on my schedule. Next, do you ever use Williams fractals? No, I am not familiar with Williams fractals. Next, is the type of candle more important than the TD indicator, which trumps what? Neither trumps either. I'm a huge fan of candles and the indicator, which is why in my perfect world, you get a reversal candle on a 9. Like for example, in my perfect world, this is what I want to see, like a doji at the top of a run with a 9. That's my perfect world, right? Also, in my perfect world, what I want to see is this one wasn't perfect. If this was a shooting star, it would have been perfect. But here, I have a 9, and the following candle is a reversal candle at a trend line. Again, this is the kind of 9 I want to see. A nice doji candle, or right here, I have a 9 double 13s and a reversal candle, the candle after. So that's what I want to see in my perfect world. I mean, neither trumps the other. If I was forced to choose which one is more important, I would say the candle is a little more important than my indicator, but ideally I want to see both. Okay, I really want to see both. Okay. A good question though. Next, can you mention Saturday one more time? Well, I'm not sure what there is to mention, right? Here is, I mean, you have to either email me or reach out to me on Telegram. I guess email is a little bit better, but now that Saturday is a few days away, hitting me up on Telegram will probably get my attention a little bit faster. I mean, it's all explained right here in trading seminars on my website. Here is the topic list. You do get access to the numerical indicator. By attending the seminar, you will get the update that's probably coming next week. I will grant you access a little bit ahead of time. I will provide a few videos that will educate you on how to use it. We start at 9:30 in the morning, normally 10, but I have a family event that night, so I have to get back home. So unfortunately, there won't be any drinks or dinner with me after the seminar. Sorry about that, guys. Normally, I do that. And yeah, so there's really nothing else to say. It's good for both beginners and advanced traders. We start with what is a candlestick, and we end with some mock trading on live charts and explanation of the numerical indicator. I get a lot done in 7 hours, so that's about it. Finally, just check out the affiliate and referral program that I have. It's a bunch of things that I actually use. Most of them save you money. BitMEX, you get a break on commissions. VPN, you get 50% off. And TradingView, like again, I love TradingView. I've been using it since 2014. Chart all my Bitcoin stuff. So if you're going to sign up for TradingView and pay for an account, please use my affiliate code. It's one way to support my work. All right, guys, I've got exactly 1 hour, and it's time for me to get going. I will turn on my camera, take one last sip of my tea. I need to actually make some breakfast. And if there's any food in my house, I just haven't been here in about a month and a half or two. And I'll see you all in the next one. I'll try and coordinate with Jimmy. Later, guys.